All right, welcome back to another episode of No Dumb Questions. We are excited to have you on here today. We've got a little bit more. One of the topics we don't love talking about, but unfortunately, one of the topics that comes up from time to time, and we've helped a lot of our clients through this, and that's home ownership after divorce. And we see a lot of different options, a lot of different things of where it's already a stressful time going on, and there's a lot of things that can go wrong in those separation agreements, and too many times we see people having to declare bankruptcy, having to go to private lending, have to go into rent, and there in a lot of cases there is an opportunity for both parties to have home ownership after divorce. So today we want to kind of talk down and break through a few different strategies and some of those documents that you're going to need in place before we can even get started, which I think is really important to have. So, Justin, thanks for jumping on today. How's the week been before we jump into this?
Everything's been good so far. It's been surprisingly busy based on time of year and that. So that's good. Activity's picking up. Lots of pre-approvals, phones ringing, lots of people kind of asking questions. So it's things are picking up. It's going to be a busy, it's going to be a busy next couple months for sure. So just based on the buzz and the interest of the activity on the phone. So, how
Yeah.
about you?
Yeah, no, same thing. Been very busy. Had a couple offers come in this week. Another one come in late last night. Yeah, people are buying. People are still looking. The new rules come out for the first time home buyers. I guess we're 9 days away from the new rules, so things are changing. I think we're going to be in one of our busier Decembers that we've had, and I think that'll continue right into the new year. So let's
Yeah,
talk.
awesome.
So let's talk home ownership after divorce. I think the key here, let's start off with the big one. If you're looking to have that divorce, or you're looking to buy the house after divorce, number one thing that's got to be done right away is that separation agreement.
Yeah, for sure. I mean, it's natural for anybody, right? First um the first topic, I guess, or first area of concern when people have made a decision to kind of split and part ways is, where are we going to live? Where are the kids going to stay? All of that sort of stuff, right? So a lot of the times, naturally everybody wants to stay in the matrimonial home, right? One wants to buy the other out and stay, and it's easier for the kids. It's easier for them. So that's generally the first question that kind of comes up, right? I want to buy my spouse out. I want to stay in the house. What do I need? Usually that's the kind of the first phone call. It all happens within the first week of everything kind of happening and going down. And usually it takes a little bit of time to be able to do that. The number one thing to be able to have that, to buy out a spouse or do something, which is the very important document that you need, is that separation agreement. Every lender is going to want to see that. It's going to outline what the equity is in the home. Is everybody in agreement to part ways with that? How much is going to be exchanged from the equity in the home once someone buys each other out? And it's really created as a purchase, right? You're purchasing the house from a spouse. Good about that is, you can go up to 95% of the value of the home. We call that loan to value in our world. So that means, you just need a down payment of 5% or remaining 5% equity in a home after you've given your significant other their portion of it, right? So that's kind of the number one question. A separation agreement usually can, in most cases, it can go smooth. We see some people that can be amicable and sort it out for sure. That's always the key in any of this stuff, right? Is to try, obviously, which is difficult, and stay as level-headed and stick to the facts as possible to keep things moving forward. But there's a lot in there that goes into that separation agreement, not only the equity in the house, but for us, when we do the mortgage and what lenders are going to look for is they're going to look for, are you receiving or paying support or alimony to income? Again, needs to be in a formal agreement, or are you receiving it or having to pay it, right? If you're having to pay it, that becomes a liability or a debt, just like a car payment or a credit card or a line of credit. So we need to see those things outlined in the separation agreement to be able to proceed.
Yeah,
So
no, a lot of detail that goes into those for sure. And like you said, it's so important because we have people that come from time to time and say, hey, we've decided on this. This is what we've decided on. Well, until it's in writing, and we see it so often where, right in the beginning, hey, we're on good terms, everything is good. This is the agreement we've made. I've already made these payments, but until it's actually signed off on, none of it really matters, because it can all change. And if you go and buy your next house, and all of a sudden you end up with an extra $1,000 payment that you didn't think was going to be there, that's going to affect affordability. So that separation agreement is going to be key. It has to be in place. And there's a couple different nuances on there that we've seen in some different separation agreements. So in speaking with different lawyers, of why they need to be on there. So one of the biggest things that we want to see right away is run the numbers before that separation agreement. We work with some great family lawyers that are really trying to get this done and get it done properly. But a lot of times, what we see is that family lawyer, they just want to get it signed off on, which is good in some ways because we want to limit your billable hours. Obviously, those start to rack up pretty quickly. But we also want to make sure that we've got the numbers done correctly. So sometimes we want to give that big lump sum payment out up front, in order to buy the house out. Sometimes it's a little bit different to, how much is going to be the monthly payment in terms of child support, maybe alimony, what's going to be paid out on a monthly basis. And sometimes adjusting those and making small tweaks to that, it really can affect how much you can afford on the next house, either with your down payment or that monthly payment. And we've both helped clients, Justin, where they had an agreement in place and only one party was going to be able to buy after. There wasn't going to be a possibility for both to be able to buy. And we made, talked about some small adjustments where we can have both parties, purchase a house after, and both parties can have that home ownership after divorce.
Absolutely. Yep. No, it's a very important document that a lot of people don't, some people don't take as serious as it actually is, right? And you're going to need it for any lending, right? I mean, we get the people that come, that are in a good situation where there is an amicable split, and it's just, yep, it's just hey, it's a handshake. I've been receiving this money forever. Kind of later down the road, in a matrimonial split, would call it, right? Like, oh, I get this support and I've been just getting it forever, but now I want to buy a house. And we're all on good terms and everything else. That's awesome, right? I mean, that's the ideal situation for everybody. However, when it comes to lending, a handshake deal doesn't really work, right? They'll want to see the confirmation, want to see it in writing, to back that up. Even if you've been receiving it for 4 or 5, many years, for that matter, they'll still want that formal document in place. So,
Absolutely, absolutely. Because we do see sometimes where it creeps back in after, unfortunately. And then there's also a couple different nuances that we're seeing more on some of these agreements that I think are important to talk about. One is the the child support table that's set out. So the child support table is something that's basically dictated based on your income of how much you will owe your ex, and vice versa, and how much is going to be paid back and forth. In a lot of situations, we're seeing it where, for example, Mr. Smith is going to owe Mrs. Smith $1,500 in monthly child support payments, and Mrs. Smith is going to owe Mr. Smith, let's call it $1,000 back. And as a net result, it's $500 will be paid from Mr. Smith to Mrs. Smith at the beginning of every month. It's really important that all of these little details are actually written in the agreement, right? Because if it's not, and we've had different situations where if it's not, that liability has to be added into your liability. So no different than, like you said, a loan or a credit card. If that liability is $1,500 that you have to make those payments on every single month, that's a lot different than a $500 payment that you need to make every month. Even though we can add the income back in on the other side, sometimes that makes a huge difference. And when we're dealing with really tight ratios, sometimes, so with your qualification ratios, sometimes they can be out just by 0.5% or 1%, and that makes a difference between you working with an A lender and getting prime rates, and having to go to a B lender and sometimes having to pay a premium on that rate. So a couple really different, a couple of situations where I'm not saying that your mortgage agent should be your first call when you're looking for a divorce and you're going through that separation, but definitely a really important part of your team as we go forward. And I know both of us have really good teams of family lawyers that can help you through this. We can help on our side. There's other partners that we need to have involved. Lawyers, realtors are really important to have. Those financial planners. So after the divorce goes through, we want to start rebuilding some of that wealth, because a lot of times the wealth is something that takes a hit on those.
Yeah, for sure. And I mean, back to kind of what you said there, it's a lot of it, even if it's common sense, may not be considered, right? So like the example you gave there, if Mr. has to pay $1,000 and Mrs. has to pay $1,000 based on their income, the assumption is, or well, Mister's just going to pay the 500. It's very important that it's specifically outlined in the separation agreement that even though those are the numbers, however, Mister is responsible to pay $500 a month from that net. Just can't go under the assumption, because a lot of the times we're running into hiccups with the separation agreement where it says Mister pays 1,000, Mrs. pays 5, or is responsible to pay those amounts. The assumption is, well, you just transfer the 5, but unless it specifically details that Mr. is only responsible to pay 5, those liabilities, those full liabilities will count and can work against you in qualifying for a mortgage.
Yeah, really important. Like I said, almost anything that we've got to take common sense out of it. Maybe not common sense, but take assumptions out of it. Assumptions are never really a good thing, especially when it comes to legal agreements. And your mortgage is going to be another legal agreement that you're going to have. So, a lot of really good information in there that we chatted about today, Justin. Like I said, run the numbers first before you get that separation agreement signed off on. Run your numbers first. You want to make sure you know exactly where both parties are. We can help set you up for home ownership after divorce. We both have full courses on this. If you want to go and check out Adam's Academy or Justin's Academy, they're both linked from our websites. We'll link them in the notes below here, but check out our courses. Use promo code CLIENT. You can get free access to those courses. They'll help guide you through what the next steps are for that home ownership after divorce. And if you have any questions, feel free to reach out to either one of us. Like I said, we will help you. We have a team of people that can help through that separation and through the entire stressful process, and maybe just make it a little bit easier.
Awesome.
Awesome, Justin. Well, thanks. Have a great weekend. Thanks everybody that jumped on and tuned in today. And we'll chat to you again next week.
Wonderful. Have a good one.